Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, October 26, 2016, and this is the Daily Report for Gold and Silver. We do have moderately lower pricing across the board in the precious metals markets, with gold trading off about 0.5% on the day, 1267. That is our current print, and that, of course, is most active December's contract, putting it off over $6.50. Low on the day has been 1265, so we're just a couple dollars off of the low, and the high 1277.20. When we look at spot gold is at 1266.41. Over to silver. Silver also trading lower, off about 0.75% at $17.61. That would be spot. And then lastly, when we look at COMEX futures, 1763, off about 15 cents. Low on the day is 1757, and the high 87. Let's take a look at our first chart. So traders, there's absolutely no easy way or nice way to put it, but in essence, we have seen gold prices pretty much give back the gains that we saw yesterday. As you know, we had a nice up day yesterday. We're looking at a daily candlestick chart. You can see yesterday's activity right in here. And then today, of course, we had the open just above and closed below the midpoint. It's actually a dark cloud cover, although we haven't really had a substantial gain. It's usually after a substantial gain that you would look for that pattern. In this case, I would look at this as really a consolidation, a continuation of the consolidation. Consider this: the market really had been effectively trading in a band for about the last week, in which it had these lows at around 1250 and then had these highs at around 1260, right in that area. Pretty effective trading range. Now, we finally got our breakout. When we got our breakout, we got a breakout above what I considered to be a former level of resistance, and broke above that, and then kind of traded through that point for the last couple of days. And the most significant thing to me at this point is the fact that we are still trading effectively above the 61% retracement, and that number, of course, is 1266. And as I said, I believe that 1266 is a pretty critical area. It's an area that we really want to be able to hold on to. The key area, of course, and we've talked about this infinitum almost, has been this one level right in here. This, of course, is a 38% retracement. It's a retracement from the yearly move, of course, from about 1050 up to 1376. And that's a side note I really want us to kind of ponder. Realize that when we look at the net gains of gold over this last year, from 1050 up to its current print at 12, call it 1250 even, that's a $200 rise. That's what, about a 17% increase in price. So we've had a substantially stellar year for the precious yellow metal. The market has been moving, and so the fact that we've got this area of consolidation right now doesn't concern me as much as, say, in a year in which really the tendency was down, such as 2013. Well, I can name a couple of years quite easily, but I think you know what I'm saying. In other words, we've got this market truly, genuinely moving to different grounds, and so we made this big clip up. We retraced 38%, and that is a substantial opportunity on a technical basis to see us go back into a cascading rally and to see this market move to higher ground. As I said yesterday, I'm still looking at 1300 to about 1310 as a potential exit strategy. Although, before we start counting our chickens, so to speak, we really have to see this market hold this area, which I believe it should, and then move to higher ground. And so traders, one of the keys really to following the precious metals is obviously the U.S. dollar. Since we're trading in a commodity paired in U.S. dollars, we have seen the U.S. dollar have substantial strength. We're looking at a daily chart, considering that, back as recently as March, we're down at around 92 on the dollar index, and we had a pretty solid slope in which the market was moving up. And then really the beginning of October, this month, right in here, dollar just took off like a like a rocket ship. You can see how the tact has changed. And now, for the first time, we are really seeing some potential weakness in the market. And I draw your attention to these two dojis and this potential top at around 99. Now, I believed, and it still might be the case, that we had the ability on technical basis to go to 100. But this is, to me, very indicative of the kind of key candlesticks that we will find in this particular area, meaning after a defined uptrend, you get these types of candles. But you also get them when the market is consolidating. In other words, a rest stop before a continuation. As far as I'm concerned, with the dollar, I don't believe we're going to see it go much higher than 100. I think that that would be a resistance area. And we could have hit some resistance right in here. Dollar closing off fractionally for the last 2 days, but making new lows from yesterday. So that to me is significant. This has been Gary Wagner, wishing you, as always, good trading. Maintain your current position, maintain your current stop, and we'll talk to you tomorrow for another daily update and review. Bye-bye.